All right, traders, welcome to the end of day market recap. This is Christian from Hertz Tribeca Trade Group. And not only end of day today, but we'll also do a week recap for the carnage that happened this week. Holy cow, what a down move this week for the markets. And this red that's on the screen throughout here, very similar to basically what happened on Tuesday. Tuesday we had a pretty washed out type day. Wednesday and Thursday, the market, had multiple attempts to kind of rally a little bit, various parts of the day. Every time it tried to do that, it failed. So that was just indicating that sellers were still in control, and then this morning too, just kind of a crazy move, because we came into this morning and S&P futures were down about 0.5%. NASDAQ futures were down 1%. They had the monthly jobs numbers, which I was having a very difficult time understanding why we were rallying off the numbers this morning. And I was never really able to figure it out. And I think if you look at the, and then once the market opened, the sellers who have been present all week long just took advantage of it and just completely sold the market down. So again, I asked the trading room today, I'm like, what am I missing? Why is the market rallying on these numbers? So I don't want to get dramatic here, but what I didn't like, I'll give you my 2 cents about this kind of stuff, but the average hourly earnings actually went up, which indicates some inflation. Now, the market doesn't really seem to care about inflation about this right now. They seems to care more about, the possibility of a hard landing in the economy. But yes, the numbers are weak. But I think that. I know that the market is really emphasizing, or seems to be emphasizing these labor reports, but eh, you know, it seems like the players who are involved were going to sell on anything. I don't think that the numbers were, and again, I know that's kind of hard to say, but if you look at the price action and coming into today, the damage was already being done pre-market. So maybe there was a little short covering on something in here, but it didn't really make a lot of sense to me. So next week, speaking of inflation, we do have the CPI report and we get the PPI report. At least they have them in the right order this week: CPI first, PPI second, or what I think to be the first report. But we also get the NFIB Small Business Optimism Report, which has been weak for a while, but yeah, the market doesn't seem to really care that much about inflation right now, and this happens from time to time. The market will care about one thing, and that'll be the focus of what the market is focused on. But it shifts, and it shifts all the time. The market is very dynamic. It's something that I've tried to teach traders over time, is to understand relationships, but be aware of when the relationships change, because they do all the time, right? And usually it happens right when you think that you figured out the market and you understand a relationship, and like, oh, okay, X happens, then Y should happen, or Z happen, or A happens and then B happens, right? As soon as you get like comfortable with how that works, usually the market shifts and it starts to focus on something else. For a while, an example here is that once inflation was the big worry, and inflation numbers started to come in lighter than expected, what would you see rally? You would see the small caps rally, right? So that trade worked for a while. But again, it changes, and the market, shifts to something else that it's concerned with. And right now, that's about, it's basically about the economy. By the way, risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. So, are we teetering on, a recession? Is that what the market's calling for? And does the Fed have the right view on this? Well, I'm not really going to get into that. I view that the Fed is always late. They're always, they're constantly looking at past information to make a decision. And I think that, today all I heard about was, oh, are they going to do 25, or are they going to do 50? At the end of the day, I hate to. So I'm always kind of, I feel like I'm being contradictory about these things, but Yeah, I mean, there will be a reaction that day if the Fed decides to do 50 basis points. But, people get so worried about these types of things that they miss what's the expression, the forest for the trees. So, what happens like if the market continues to sell off, right? And we've seen a pretty nasty move down this week. Uh, but if the market continues, like if you're so worried, like if that's what you're worried about, that the market is going to sell off because that they're revealing something about the economy and they decided to do 50 basis points, if you're worried about that reaction on that day, what about if the market sells off for another 2 weeks until then? Like that doesn't concern you. So, it's like why would you be why would people be concerned about what the Fed is going to do on that day, whether it's 25 basis points or 50 basis points? Shouldn't you be worried about what the market is doing in front of you? Because I could really that reaction, I think, will be over pretty quickly. But what I'm more concerned is if the market is selling off right now and selling off pretty heavily. So, and I don't really think that has much to do about, whether or not they're going to go 50, 25 or 50. I just don't think it's that material. Why don't I think it's that material? Because first of all, they've over tightened and they've left it there. And I think that's a policy mistake. But see, I said I wasn't going to get into this and I did get into it. I apologize. But, so the market is pricing in, it's still pricing in that they're going to do 25 basis points. But don't you want them to do 50 basis points and get ahead of the weakness if that's what the market is so focused on? Because 25 basis points at the end of the day ain't going to do much. And you have to think about too, like if you're worried about the economy, how long does it take for a 25 basis point cut to affect the economy? 3 months, 6 months, and you're talking about 25 basis points, which is barely going to, but like, okay, that brings it down from 550 to 525. You think that's going to move the needle? You think it's going to move the needle if they go from 5.5% to 5, and that's going to signal that there's weakness in the economy? Uh, I, again, that's a little bit more material, the 50 basis points, but the damage is already being done, like in terms of the data that you're getting. So in any event, I'll move on, but I just think it's hysterical what the market tends to go on and on about. Oh, what are they going to do, 25 or 50? What about what's happening right now, and the movement down right now? So I'll move on from this. Because people get so focused on what the Fed is doing. But I'll tell you, the interest rates are not the problem. The weak economy, or the possibility of a weaker economy, that's the problem. All right. Not whether they're going to do the 25 or the 50. So again, this is the focus. Okay, I'll move on. So let's look at where we are, and what I'll try to come up with in this video, besides my own personal take on what the nonsense that happens on financial media, is kind of where, if we've come down enough, are we at some support levels at this point? So here's the chart, and the MarketWebs value areas do me a really good job at giving me a sense of a roadmap of where to basically take a shot at something, and where to know what is what the situation is. And we could either use S&P futures, if we look at S&P futures, and just to kind of put things in perspective from last month, right, we couldn't break out of the value area, and we tried many times, and then it was rejected. Here was the action that I was referring to on Tuesday. Wednesday and Thursday, like I said, the market tried to rally, hesitated there around the 20 and the 50 moving average as we lined up, and then ended up taking another market move down. So we've got about, where we've gotten a decent amount of support is going to be at this bottom of the September value area. And again, this is based on all of the activity from August, right? And it comes into play every month. And just for example, the top of value really came into play in there for S&P futures. So this 53.4125 level, I think will be important if we continue to sell off. On the bright side, we did take out a 1 hour version point of control, but we really didn't hold in there. right? And you can kind of see the way that I have my charts adjusted, this gray box is what you just saw in the previous chart. So we're still, we're just trending down here. There's no confirmation of anything. So, I always see folks try to bring out like, okay, well, this isn't that bad or that isn't that bad. Number one indicator to me is watching price, and watching price, it's just trending down. So we just don't have any confirmation. I would say also that I didn't have a high probability of the market turning around Friday afternoon, because the market seldom does that ahead of a weekend. So another percentage down, or no, it's only 1.1% down, sorry about that, is where we could see some stabilization. SPY is going to be a little bit different because it's a different volume profile. But this VPOC was taken out again. It's just a pause, right? No bounce. I mean, there's just no buyers that are coming in here, and and every time that we get to one of these virgin point of controls, because it is, remember what a virgin point of control is. It's where a lot of buyers and sellers previously met up, right? And we haven't revisited. So that's why they become very important points of interest, because it's going to be a battleground between those buyers and sellers and who's going to win out. A lot of times you can see reversals off of them, but not always. It depends who's going to win the battle, and you can see there's just too much selling. You can see the volume there. So that's the story. When we look at the Q, so again, we're close to support, and we're close to getting washed out too. To take a look at what the Qs are doing, and we can overshoot, by the way, and come back. That happens too. But let's do this the correct way. Daily chart. We are I think we're selling off a little bit in the after hours. That's why you don't see it here, because the Qs will not cover the after hours. But we did close right around this 448.16 level. So we're down into some support, and we'll just have to see if that support holds on Monday. If not, there is another VPOC down here. So we just don't have any real concrete confirmation that that buyers are stepping in or anything like that. Again, where we continuously see a little bit of effort is around the open, right? And then those sellers kind of just assert themselves after after that first hour of the day, or in this sense it was the hour after the jobs data at 8:30 in the morning. So we're leaning down in all of these, and we'll have to just see if we hold support. Now, there's a couple positives. I think that we're working our way through, if you look at the equity put call ratio, this is not adjusted for today's activity, but it's a 0.98. So it is finally indicating that there's some fear that's going through the market, right? Now, we could also look at this too in terms of what the VIX is doing. But again, you go back to, oh, sorry. Let me just go back to this one second, and then we can go from there. But I was talking about the equity put call ratio, because I understand everybody's always looking for reasons. And I think part of the reasoning was, why we've fallen so much is, number one, that's what September is it's tough. But look at the complacency, right? You go back to the middle of August, no one wanted to even hear about the possibility of weak seasonality. And again, I'm not faulting anybody for this. This is what happens, right? And the market is an interesting place. And sometimes nobody even wants to think. Everybody thinks we're just going to blast off to the upside, right? And that's what I heard last Friday too, after month end. And I was like, I don't really get it. Just like I'm saying today, I didn't think that we had a good chance to rally back because it's a weekend, and normally markets don't bottom on a Friday. But just last Friday, I was like, okay, it's month end. I don't draw any conclusions from, mechanical type buying or selling that has to happen at month end. And, so you have to be really careful about doing that, but I saw so many people because I think I had to leave early on Friday. Or yes, I left right at the close last Friday, but I was like, wow, people are really getting bullish, and I'm like, I don't understand why. We're entering into a weak seasonal month, and there wasn't really anything that inspiring. But in any event, I don't think you could if you told people this on Friday, people would have had a hard time with you. And again, that just means to me that there was a hell of a lot of complacency. And I think looking at looking at where we were in terms of there's no puts at all going up, based on the equity put call ratio. So again, why am I going through all this? Well, number one, I always get questions about, hey, well, why do you think that this happened, or why is this happening? And a lot of times it's just the way that people are positioned the wrong way for things. And when that happens, when people are super complacent, they get caught, and they get in trouble. Here's what the VIX looks like. We're not doing what we did last month. Um, but we're staying. So again, it's not real heightened, but it doesn't have to be heightened, right? I know some people they tend to look for extremes and say, aha, geez, this is really extreme. We're way over, but volatility can stay up here for a while. It is what it is. This is just telling you, remember that the VIX is just telling you that there's heightened volatility, whether or not there's heightened volatility. And above 20, the volatility is a bit higher. So I don't think you could really make too many conclusions from this yet. A couple other things, the VVIX, I also look at this, when the VIX starts to move higher like it did. This is one thing that wasn't terribly bad, is that you don't see the VVIX, which is the volatility of the VIX itself, right? Like the second derivative of volatility. This did not branch higher like that. I'm just going to go over we talked in the beginning of August about backwardation and contango. And so if we do VIX, let me do VIX, and this, it's the wrong button. Hold on. Control F10. That's not it. Sorry, bear with me. VIX. There we go. I know thank you for bearing with me. I know it's Friday. But here's the VIX curve. So we're back into, unfortunately, we're back into backwardation. And it might stay that way, because if you rationalize this a little bit or think about this logically, right, the next Fed meeting is going to be the 18th. This VIX expiration is the 20th. So it probably will stay heightened into that Fed meeting, because the market is kind of nervous about that, right? But regardless, we're back in backwardation, where the front month is bid up here. What else do I need to go over IWM? We'll just do the daily chart of IWM. The bearish 80% rule is in effect, and we slipped below the 50-day moving average. We filled, a couple of things that people realize when people really like to look at gaps for whatever reason, but the gap was filled here, and the gap was also filled on SPY. Some people, I guess, think that needs to happen. So again, that's a small positive. I think some people were waiting for that gap to be filled. All right, well, you got it. A couple other things, right? That I've been talking a lot about SPLV. Look at what's been happening to SPLV. Now, this is also, as we go through, like the cycle of a sell-off, what normally happens is, even the places that are doing really well, such as the low volatility areas, the consumer staples, the insurance stocks, the defense stocks, aerospace and defense stocks, they eventually get hit too. When there's a market dip, they don't manage to make it out perfectly. And I had some questions about this. We do a Q&A every Friday, and I had a couple of people ask me about, hey, well, what do you think? Consumer staples. Now, the reason why I wouldn't go into consumer staples or lots of these areas here is because they've become very expensive. So, for example, if we bring up XLP, and I don't know if Bloomberg is 100% accurate here, but I think you kind of get an idea of what I'm saying, right? So you have to ask yourself, is there a lot of growth in consumer staples, right? Do you view this as a high growth area, right? So that's the number one question. And if you look at this, get the right screen up for you. Okay, here we go. Average PE. Now, again, I'm not a huge fundamental person, but I know enough to get by. Do you want to be buying consumer staples with a 27, 28 PE? Right? That's basically priced for a high growth stock. So it is what it is. People have gone here because they're worried, right? And it's been bid up and it's become a momentum trade. But you have to ask yourself, do you want to be buying a really do you want to be going into some very expensive consumer staple stocks right here? You know, maybe they're going to have some big project, some big tech project or something, but I'm joking around a little bit. But, you know, that's even expensive for a tech stock, and tech has growth. Consumer staples doesn't have much growth. So just bear that in mind. And that's why, you know, at this point, like if you caught the move early and you've been following the trend, congratulations. You've done very well. But at this point, right, what we're doing is we're looking forward. I wouldn't necessarily be buying these names after this type of a move, right? And I think that you're going to see possibly some more profit taking, even more of what you've seen the last 2 days in things like low volatility ETFs. All right. They've had a huge run and people are going to take profits. So where does that leave us for next week? You know, I'll be pouring over some names that have been pulling back into support. You know, I like this one, for example. This is ONON, right? This is a nice hold at the top of the value area for now. So what I generally look for is for it to start to kind of move back up and to the right. And I think that will be interesting. I've talked a lot about Tesla the last couple of days. This is what happens. And, you know, I talked about some VPOCs earlier in this video, right? Notice where this tried to go higher and failed, right? And the overhead supply won out here. Right? This happened on this particular day. This was yesterday, I believe, right? And then it tried to go up. This was pre-market activity, and sellers just pushed this thing down. So that's a bearish engulfing. I think that this chart, I know that some people are very good at Tesla trading. Congratulations, but this is a very difficult chart, I think, to position with. It will rip for a couple days and will have no follow through and will completely retrace. That's not the best to me. That's not my strategy of trading. But if you can make money in it, congratulations to you. I just don't see how you how you do it. I mean, other than once it rips just for 2 days, you've got to be a huge seller in it, you know, because it just doesn't have any follow through. All right, sorry to leave on a bad note, but again, it's important to kind of look through these things and learn. And I'll tell you, if you've made it through this, if you've made it through the first ugly week of September, you know, one of the things that I've been talking about till I'm blue in the face is what we experienced last year. You know, just hang in there. The way that you survived and made money and towards the end of last year and the beginning of this year was to not lose a lot of money when this happened, because this happens, guys. And unfortunately, like, this was a situation where it lasted for a while, right? So you've got to be fresh. You've got to try not to get worn out when the market's doing this. All right, guys, have a great weekend. I'll see you on Monday.